that's good. I mean, I'm ready. We can do whatever. I'll try to keep it as natural and like not turn it into like.
So when you're applying for a loan, no.
Yeah, and my attitude, and I've thought about this a lot over the weekend. Obviously this is like what we do. This is like how we get paid to do this. But I don't necessarily know that it needs. I don't know how you approach it. Do you approach it as advertising, or do you approach it as informative?
Informative. So like I'm not trying to ask for a sale or like, hey, follow the link to like go do this or whatever. It's literally just like a building trust thing.
Yep.
Like the more people see my face, see me talking about real estate without an ask, it just builds that trust. Like, oh, this dude's actually like just informing people. So like when the time is right, I feel comfortable going to him and asking questions without necessarily feeling like pressured to do anything. Yeah. So it's really just informative stuff. Like I wanted to talk a little bit about like upsizing and stuff today, and like using equity and how I think like there's an opportunity for people with affordability and everything right now. Like if you have a lot of equity in your house, it might put you in a good position to buy something right now versus it's kind of tough for first time home buyers and all that stuff just to come up with the finances and stuff.
Yeah.
So
no, I mean if you own property now, if you've owned property for the last few years, you're definitely in a situation where it's easier to make those moves as opposed to somebody who's a first time home buyer. Unless they have the capital, the assets or whatever to use as money down, you're in a much better situation if you're already a homeowner.
Yeah. So like I just think of it because like me personally, like me and Kelsey have owned our house for 8 years now, and we're in a spot where we're feeling kind of tight in our current house. It's just a 3-bedroom, 1-bathroom. It's a little over 1,000 square feet. We have our daughter. If we're thinking, okay, if we want another one, like it's going to feel, we can make it work. Like it's going to feel pretty tight. So like, we're starting to look at like, okay, how much equity do we have in our house? Like what's our loan at? What can we sell the house for? How much we're going to have after that's all said and done? What would that get us? If we wanted to go buy something else, and we like, throw it all in a mortgage calculator and like, okay, what's our comfortable payment? What's that price point look like and all that stuff. And so I just think about it because like if I was a first time home buyer in today's market, it'd be a lot more difficult for me to get my foot in the door and do that. But I think because affordability is such an issue right now, if you have owned your home for at least 5 years, you probably have a good chunk of equity in your house at that point.
Yeah.
And for certain people, maybe within that 5 years or whenever you bought your starter home, maybe you've had an increase in income or some different lifestyles have changed where maybe you have a little bit more disposable income. And I think if you've owned your home for 5 years, if you've gotten a raise at work and you have a little bit more income to play with, it's a perfect opportunity to leverage that and get into like your dream home. Because what I've seen in the markets is like first-time home buyers or first-time home buyer houses are pretty in demand. Like it's pretty tough to find anything around here for under $200K.
Yeah.
But then when you get to a little bit of like the higher price points, like even some houses at like $375 are starting to sit for a little bit longer. So like I've noticed that like the lower price point houses, like the demand is still very, very strong for that because you all just have new people that are like finishing college or having their first baby or like whatever that need is or moving out of their parents' house. Like you have people coming into the market to buy their first home. But then you have a lot of people that are kind of hanging out, stuck at that first home because they feel like they can't afford the payment with the interest rates and all that stuff and prices going up. So I don't think a lot of people even realize how much equity they have in their house. But if you start looking at those numbers and you kind of start plugging stuff in, it actually can make sense for a lot of current homeowners to level up their house if they wanted to.
Yeah, we've talked about this at my office, and I think there's something like 75% of all statistics are made up on the spot, right?
Yeah, right.
There's something like $30 trillion worth of like untapped equity right now in the marketplace, in terms of homeowners, and so none of that does anybody any good at all until they actually decide to do something with it, right?
Yeah.
Whether they sell and pocket that money or they use that to what we've talked about, like leveling up, or there's other things that they're gonna do with it. The fact is until you make a decision to do something with it, it has it's just on paper. It doesn't have a lot of real value.
Yeah, 100%.
And so okay, so you and I are in different places, right? I'm almost 50. And, I have I've not done the best with my. I mean, you can ask my ex-wives about like my financial history, right? I mean, I've not been like I've not made all the right decisions over the years.
Yeah.
But for me personally, and I think I may have shared this with you. So in 2021, I bought a condo, and my whole motivation was something was inexpensive and something that was in the Northland, close to where my kids are. It wasn't a situation where I was trying to like make moves, right? It wasn't like, some sort of overall strategy. I just wanted to be inexpensive and I wanted to be, close to my kids. So, at that time, the condo I bought, 2-bedroom condo in Northland, I think it was like 132, 133, something like that. And I don't know if I'm supposed to get into like personal details like this, but anyway, it's like 132, 133 was the purchase price for that property. And I'm seeing for sale signs go up around the neighborhood. And there have been 2 properties in the last 3 months in my neighborhood, the same or less, like where I have like a full bathroom, they have like a half bath or something like that. And those properties have sold for $200,000 and $205,000. All right, so I've done nothing.
Yeah, dude.
Right, and now all of a sudden I'm in a situation. So what is that? That's like 30%. Like return, which
dude, the appreciation's been nuts the past few years.
And so my example is extreme, and it was a relatively inexpensive property when I purchased it to begin with. But now I'm in a situation where I'm like, well, what am I going to do with that? One of the things that I've looked at is actually, I've got a great rate from 2021, right? It's a different reality from what you have today. But one of the things I've looked at is a HELOC. Mm-hmm. I can, and it's not even that necessarily that I have a plan for that money, but I want to make sure that I have access to that potentially. Yeah. And we've talked about using that maybe to, purchase another property, for ourselves, maybe, level up something a little more spacious for us, or do some stuff like with potential investment or rental properties.
Mm-hmm. Yeah.
But the thing about it is, I didn't do anything. I like just bought the house or the condo. That's all I did. I mean, there was no strategy associated with it. And so I think that, housing gives you this, real estate. I mean, nothing ever goes up all the time, always. I mean, there's examples in the past where, houses have depreciated, but that's the exception. And so we know that in the U.S., this is like one of the fastest ways, like cheat codes to like growing wealth. And personally, I've done it without even trying.
Yeah, dude. I mean, so my brother hit me up last week and sent me like a Zillow listing and said, hey, what would my payment be like if I were to buy this? And so I got how much he owned on his loan and all that stuff. And I'm like, okay, you owe this much. We can probably sell for this much. You're going to have this much in equity. This is what your payment would probably look like if you were to go forward. Of course, you got to talk with the lender to confirm all that stuff, but just rough ballpark. And I'm in a group chat with both my brothers. And so my youngest brother was like, you should stay there. You got in your house at an impossible price, blah, blah, whatever. And basically, I told my brother, hey, my brother said to my youngest brother, he was like, hey, if we have an opportunity to take the money out of this house that we were just blessed to be able to buy at a certain point before things got crazy, and now we can roll that into another house, why wouldn't I do that?
Yeah.
And I was like, yeah, I mean, anybody that owned a home 2021 really or before almost hit the lottery in a sense, because things really just kind of blew up after that.
Yeah.
But yeah, you really don't do anything. I mean, you're just paying your mortgage every month. But I mean, that's what I did. My little home buyer seminar, I actually posted the video on Facebook. We're just talking about equity and how it works as far as the value of your property's here, your loan is here, and then market appreciation moves this guy up, and then paying your loan down does this. You're kind of creating equity on both sides of it. And then after 5 years, you're looking at $50K in equity, or whatever that looks like with what the markets are doing and all that stuff. But you're basically, it's like a forced savings account where you're just paying money into it every month, and then hopefully things are also appreciating at the same time. And like you said, I mean, if we really scale back history, I mean, the trends of home appreciation trend upwards, but if you start to zoom in, it's kind of like this rocky road, right? So when people talk about the market crashing or it being a bad investment, if you look at it on a short term, then sure, it could potentially, if you bought in 2007 and then you wanted to sell your home at the end of 2008, then it probably was a bad time to sell your house. But if you bought in 2007 and you sold your house in 2024, I mean, you're making hand over fist on your money. So
yeah, in 2008, I built a home, and then my first divorce took place in 2012, and we netted out of that deal. So again, that's kind of the exception, right? I mean, it was 3 years later and no appreciation, so I sort of at least dodged a bullet there.
Yeah.
But with the exception of kind of small pockets like that, I mean, I mean, there's not going to be any more real estate. Like land is like, you know what I'm saying?
Yeah.
And so when you consider that, most people, and this isn't the case for everybody, it can be a challenge, but most people, as they go through their career, as they age or whatever, their income tends to rise, right?
Yeah.
It tends to increase, and if you're somebody, if you're a couple and you want to have kids, I mean, your needs are going to increase as well, right? You're going to need more space, and even if you don't have kids, even if you have like hobbies and passions and things like that, I mean, your life tends to, unless you're just a minimalist, and I know a couple of those people, but your life just tends to like get bigger, and not just like weight, like literally like you just acquire stuff and you find that you need more. I mean, the big thing that I need, like I'm actually like kind of a minimalist now at this point. Like I've kind of rebuilt a couple times. I've moved enough to know that like I don't want to move. Like all I need is like
sucks.
I need like air conditioning and like Wi-Fi so I can like watch whatever I want to watch. But my wife, she's a gardener. Like, and all she wants to do is like be outside all the time. So for me, when I look at like my next property, I mean, again, I love my condo. The location's great. Obviously, it works with the budget. But for me, I got to account for the fact that I need more outside. Actually, I need land to keep her occupied.
Yeah.
But it's a different situation for everybody as their needs change and their priorities change. But real estate appreciates, and it's and I mean it's. I sometimes sort of joke around. I mean, I don't have a crystal ball. I don't know what's going to happen. And again, there's pockets in the market where it doesn't appreciate, and some terrible, horrible thing could happen. But I mean, we'll have bigger problems than home equity at that point.
Yeah, for sure.
I mean, there's like 12,000 nuclear warheads out there. I'm just reading a book right now. So anyway.
World War III is going to pop off any second.
Who knows? Who knows? I mean, this stuff is serious because it does impact, impacts people's lives, impacts like your family, quality of life, and that type of stuff. But again, at the end of the day, for most people, real estate in their house, it's where they live. It's where they get to have their family, have their daughter grow up, and that type of stuff. It's just where they get to live.
Yeah.
It just happens to also at the same time be kind of the cheat code for building wealth in the U.S.
Yeah, and that's why I think it's pretty exciting for people that have owned their home for at least 5 years, because now they have, with this equity, they have different options. And so, like in my case, it's, we're wanting to level up and get some more space so we can, grow the family more, or just have more space. We don't feel so crammed in our house, better area, all that stuff. But again, if you don't have kids, then maybe you can leverage that equity to start your own business or consolidate debt. Like, you just have access to money that you wouldn't have had otherwise if you would have continued to rent or whatever. So I think equity in your house just unlocks a lot of new doors for you.
Yeah, and it's interesting because we're starting to see the market trend back towards refinances being something that we're seeing. Which maybe it's a little counterintuitive because rates are higher right now, and people that have been in their house for 5 years probably have like much lower interest rates. But then it's about like, what's strategic and what makes sense for you, right?
Yeah.
If you are like most Americans, if you've rolled up or racked up debt, I mean, things are just expensive to do anymore. Even if you are fairly conservative, things are just more expensive. They cost more money. And so if you are, financing that through credit cards or whatever, if you've been in your home for a while, I mean, again, that's something that you can utilize. And so if you look at it like, maybe the interest rate is higher, maybe the monthly payment is now higher from the refinance. But if you have like taken a chunk of that equity and you have like paid off credit cards that are at 15-20% or whatever, and your overall monthly expenses have improved, you're in a better situation. Now, I mean, people kind of go through cycles where they do that and then they, do it again, and then they do it again, right? So I'm not going to like judge anybody. I've been there myself.
Yeah. But
the nice thing is, if you're a homeowner, typically you have some sort of vehicle to address that.
Right.
Multiple times.
Yeah.
The other thing that sometimes happens as well is, I mean, you refinance, you get rid of that debt, you see an immediate impact on your credit score. Which is going to improve your buying power.
Right.
Even if you've I mean, just making up numbers here, right? So say you have 30% equity in your property now, and you need to you take 10% of that to refinance to pay off debt. Okay, you still have 20%, so you still have proceeds from that you're going to be able to take, and you're going to be able to purchase a home. Sometimes a refinance that like eliminates like credit card debt is the thing that you need to do to give you the credit situation and the ability to purchase a higher priced home, a larger home.
Yeah.
And even though you had more equity at the time, like it seems kind of goofy. Even though you had more equity in your home, you had this DTI issue.
If you have thousands and thousands of credit card debt, or like the 25% interest rate is just like literally killing you every month. Like a 6.5% interest rate is a lot better than a 25% interest rate with credit card debt. So
and you can like write off that as well. You can't do that with like mortgage interest. You can't do that with taxes.
Okay.
I'm sorry, credit card debt.
Okay. Yeah. So I mean, I just think there's such a, especially with like affordability and the economy and everything being more expensive too. It's like if you don't want to leverage that equity into a new house, you can use that to bail you out of a bad situation if that's where things are going. So I mean, I think that I don't think enough people realize that they have as much equity as they do, and that they can then leverage that to make their situation better.
No, in fact, in an effort to not look like a moron when I came in here today, I did look up some information, and I saw a statistic that 45.8% of all homes in the U.S. are in an equity-rich situation. And what that means is their loan balances are 50% of the value of the property.
Yeah.
Now, I mean, this is all the U.S., right? So you got some
big
large
boys.
houses, very affluent people
Yeah.
that are like playing into that. But my example, like I had no idea I had the amount of equity that I did until I started taking a look at like the properties around me. And I mean, real estate. I'm in the real estate business. Like I'm in the housing business.
Yeah.
And it wasn't something until I just noticed what was going on in the neighborhood that I realized I had.
It's crazy because when I take what our loan balance is of our current house and what we could sell it for, I only owe like 25% left on the loan.
Yeah.
And we had actually refinanced in 2021 and took a little bit of money out to redo our windows and flooring, which again is another thing. Like if you want to stay in your house and you have a lot of equity and you just want to do some updating, you can also do a HELOC to pull some money out to update your house, and then you have your dream home right where you're at. So, but yeah, dude, it's crazy. Just like the fact that we bought our house in 2016, and like it was really, really, really cheap. And then we've done a little bit of updating, and then just with the markets appreciating, and we had a roommate living with us, and she was paying a couple $100 extra on top of our principal. So really just started paying down our payment like crazy. So, which while I got you here, do you want to talk about like early payoffs or anything with like extra payments or? I mean, anything else? I mean, we can get into any topics you want, really.
Yeah, I mean, it's the kind of like the standard, like the old school deal is like make an extra principal payment or extra, make an extra monthly payment a year. And I've seen it from 5 to 14 years. I think it's really kind of 5 to 7 years of what it's actually going to cut itself off at, or cut off in terms of the terms of the loan. But yeah, I mean, it's. That's the other thing about it. Like for me personally, I mean, I have a really manageable like mortgage payment.
Yeah.
Compared to my income. So that's something that if I want to be strategic about it, I can be paying money into it at the same time with the rate that I've got. There's other things I can be spending that money on. But yeah, I mean that's the thing about real estate is again like you and I get paid to sell houses and like make loans. So we recommend now is the time to do it. But the fact is, it's like you just can't. You don't get any of the benefits if you can't win if you're not in the game.
Yeah, it's time in the market.
Yeah, I mean it's time in the market is always better than like timing the market. Yeah. And so, and again, I use my example, I just, for my stage in life, for the number of homes that I've owned over the years, I just lucked into this situation that I'm in, right? I mean, if I can go back in time, like, and be like you, that I would love to have the same opportunity that you have. But it took me a little while to find my Kelsey.
Hey, you know what? Love you, Kelsey.
So, but no, I think I've always been told, even before I was in real estate, you want to buy as much home as you can. Like when you go to make that investment, because, again, I mean, the fact that it appreciates. So spend as much as you can. Now, you don't want to do something that puts yourself in a tough situation financially, right?
Right.
I mean, you don't want to create other problems. But I mean, that just seems to be, get as much as you can and get it. Real estate is like just about any other good habit that you have in life. The best time to do it is 10 years ago. Second best time is like right now.
Yeah. Yeah. So I actually made a little video. I didn't post it on Facebook or anything. I just put it like in this little Facebook advertisement system that I have. But I basically made a home because I read this first-time homebuyers book. And the first chapter was basically reframing first-time homebuyers' mind as this is not an investment purchase. This is a lifestyle purchase. Yeah. And the reasoning behind that was people, before they get into the game, they're like, oh, interest rates this or prices this. And they're like, oh, it's not a good time right now. And that might financially be true for you. But when you're talking about percentages and this and that, whatever, you're talking about investments. And this is not an investment, it's your home. And so what I mean by that is you're not getting cash flow every month off this thing. And so you're not, of course you want to calculate your payments and all that stuff and make sure it financially makes sense for you. But you're talking about a place where you're going to raise your family or plant the roots or, like this is where you're going to live and create memories and all this stuff, not necessarily an investment. It'll be an investment on the long term if you stay there long enough and it appreciates. But it's reframing your mind as like, if you're not happy in your current living situation and it financially makes sense for you, why not do it? And then, over time, the market should appreciate. While you pay your mortgage down, you're probably going to be in a good financial spot when you go to sell it, versus always trying to time the market as if you're doing an investment. Like if I'm going to buy a rental property, you're looking, okay, what's my holding cost while I flip it? What's my monthly payment going to be? Does the cash flow make sense? Blah, blah, all that stuff. I'm not necessarily doing that in my own personal primary residence. It's, does it fit my family's needs? Does it fit my location? Is the monthly payment going to make sense for me? If it checks all those boxes on a lifestyle standpoint, do it. And then I'm probably going to be there for at least 5 years. The market should appreciate as long as history repeats itself. And even if it doesn't, then I stay there longer, and I know the market will eventually level out to where it's going to appreciate.
Yeah. So have I ever asked you about? So I tend to be sort of maybe more philosophical with some of this stuff than I should be. Like, anybody who really knows me knows that like I'm not financially motivated. Like I get it. Like, I like things, but like I'm just not. It's just never really been about the dollars. I've spent 20 years in sales, and for me, it's like the affirmation, the dopamine hit of knowing somebody chose me and I've helped somebody accomplish their goal.
For sure.
And so, do you? I can't remember if I've asked you this. Have you ever read Simon Sinek's Start with Why?
I have a long time ago. I remember watching his YouTube video that came out with like the circles and going out and everything. And I have the book, but it's been a while since I've read it. But yeah, I have read it.
So like, I mean, you're not gonna get a lot of traction with me like talking about like like making money moves and like investments and that type of stuff. Yeah. It's just not how I'm wired. If you hand me if you put on a table a $5 bill and a cup of coffee, okay, if I can have both, I'm going to take them. But in that moment, the reality is I'm probably going to take the cup of coffee because I like to sit and drink like a cup of coffee. Yeah, I can't do it this late in the day.
I'm right here with you.
And so, if I look at that in terms of like, just anything else, I mean, like, yes, I mean, there are some people that just have a passion for money, all right? I get it. It's kind of how the world seems to run. But for me, it's more about like, the experience I can have and the things that like I can, that I can do for my kids. I can take my kids all to, and I've got a bunch of them to a Chiefs game. I fly out to California. I can spend, road trip around California with my son and my wife. I can do those are the things that are important to me. Now I get you got to have money to do it.
Right.
But I kind of think like homeownership and real estate is sort of like why are you doing what you're doing? Okay, so most people when they buy a house, they are buying a house, like I said, because it's where they're going to live. It's where they're going to raise their family. Sure, you got to do the thing that makes the most sense in the time. You don't want to do something irresponsible. And if you have an eye towards the future when you do these things, listen, you're going to make better choices. I haven't always been that way, but I'm just like not wired that way.
Yeah.
And so for me, it's, when I look at like a home, it's like, what really is it? Sure, it can be like a vehicle for like income, but it's just where I get to be and like do the things that are important to me.
100%.
And so my why, you know, I have a lot of different whys, you know, based on whatever the endeavor is, whatever I'm doing. But in real estate, it can potentially help kind of turbocharge like those other things, you know?
Yeah.
And so you buy a house with more land, you buy a house with like, I mean, my wife's a perfect example of this. This is the thing that sucks about our condo. We have like no kitchen. No kitchen, and she spends all of her time in the kitchen. I'm very fortunate. It's like what
chef.
she wants to do. Yeah, she's like always cooking and doing stuff. And so like, you know, more than anything, you know, I need some land for her to garden. That would be great. But more than anything, when I look at our place, like all of the arguments that we have are all because we're right on top of each other, like in the kitchen trying to, like I can't wash the pile of dishes at the same time.
Yeah.
And so you know, again, it's a little philosophical, but like, you know, what's important to you? You know, what are your goals? What are the things that move you? And the fact is, real estate's a pretty good way to kind of financially like achieve those goals.
100%. Yeah, like so me and Kelsey actually went and looked at 2 houses yesterday because we're planning on moving and probably.
Did you go with the realtor?
I did. Yeah. They let me in the door and everything. Yeah. So.
Did you figure out how you're going to pay him if you get with the NAR deal?
I'm going straight to the seller's agent.
Okay.
No, I'm just
That's what I typically
do. No, but no. So we go look at these houses and stuff, and we kind of calculate our payment based off our equity and crap, like, you know, just a very rough idea of what it would be. And so I'm like, okay, this is probably like top where we're comfortable. And again, like I'm not very like materialistic driven as well. Like for me, it's more about like I genuinely feel like I'm helping this person. You know, it's the thrill of the hunt as far as like finding a client, getting them under contract, like the whole process just excites me. Like actually, like everybody thinks like closing day is like this exciting thing for the realtor because you get this check and stuff, and I'm like, I mean, it's cool that like my bank account increased, but like I don't like feel any type of way off of it. I really love. Actually, my favorite part of the process is getting them under contract. But so we're going through all this, and I'm looking at the house that we're looking at, and when I get back, I'm like, man, that's kind of a bust. Like I don't know if I can see myself spending any more money on that, because we get back to our house, I'm like, I'm actually kind of good with our house at the moment, because like really it's just the area is not the best. Like you get quite a few homeless people kind of walking in and out. We kind of have a neighbor issue with our neighbor. Like their dog keeps like jumping the fence, like this giant German Shepherd, and we have these like little rat dogs, and like the German Shepherd actually like bit our dog, and like so we're kind of having a little spat with the neighbor as far as that. So we're just like playing with the idea of potentially moving, but it's when I think about the money part of it, I know I can make it work, but like it's not. I don't think I'm quite in a spot where like my why is strong enough to like make that move. Yeah. And I really like whenever I'm doing like my initial consultations and stuff like that. Of course, you have to financially make it make sense, but I'm really like digging into the whys and like why'd you come and sit down with me today? Like what's really what's your current living situation? Why are you unhappy with that? What's this going to look like when you get into your new home and all that? And that's really what like gets me excited about helping people is, okay, basically we're problem solvers, right? Because we have this problem here. Here's the solution. We don't really know if it's possible for us to get there. And like that's what really amps me up is like being the one to kind of like bridge that gap and make that happen.
So have you ever been in a situation where somebody's wanted to move forward in a transaction or wanted to buy a house or something, and you felt like that wasn't the right thing for them to do and told them that?
Yeah.
Yeah. Mm-hmm. Yeah, it's,
I mean, actually the client that we just closed on last week, the very first house that she was under contract on after the inspections, she got really excited because it had a pool. Yeah. And then we're looking at the inspection report, and it's XYZ, and I'm like, hey, listen, like you can go buy an above ground pool for like $600. I mean, you're talking about this laundry list of stuff that you're going to want to do the house to feel comfortable moving forward with it. Let's just cancel it. Go find another one, and if it doesn't have a pool, which is like one of her like pluses, if the house had a pool, just go buy a $600. I mean, you're going to save more money just go buying a $600 pool than you are, fixing the X, Y, and Z that happened on the inspection report. So, I was just telling him we have a new agent in the office, and he called me. He's like, hey, just got my first deal under contract. Like, we're about to go do inspections. Like, any heads up or anything? I'm like, just take it for what it is, and if the client doesn't feel comfortable moving forward, then cancel it and get back out on the hunt.
Yeah.
So he's like, okay, I hope that doesn't happen. Calls me afterwards, and it happened. And he's like all bummed out about it. And I'm like, dude, like the last thing you ever want somebody to do is like move forward with the house just because you don't want to go back out and show them more houses or spend more time with them. Like at the end of the day, like this is a long-term game, and the only thing you should care about is making your client as happy as possible, so that for one, you just do a good job and you feel good about that, but they're also going to send you referrals and be like, man, he really like worked for me. He had my best interest in mind. He's not trying to talk me into buying some expensive house that I can't afford, or something that I feel uncomfortable with because of, whatever happened on the inspection report. So yeah, I mean, I'm totally honest with people about that, because I think of it as my reputation on the line if they move forward with something that they're not happy with.
Yeah, well, I mean, even if it's a $125,000 home, $125,000 mistake, that sucks.
It's
and you do not want to be a part of that. I think that, as crazy as the market has gotten, as competitive as it has been here, across the country. I mean, I'm in a lot of markets. I'm not just in Kansas City. Obviously, most of the business I do is here in Kansas City. But as crazy as everything has gotten, I think there is a part of like kind of not necessarily keeping up with the Joneses, but it's just like, everybody's doing it. Everybody's doing it. Everybody's doing it. And there's like this inertia and this momentum people have. And it's just not always the right time for people, And I think that, I think our business and just sales in general has a reputation that, we're always going to kind of be pushing forward. And listen, it's how we, provide for our families, right? So we're going to always be pushing our process and doing the stuff that we need to do. But you have to be able to be you have to be credible about it. And you can't. For me, the thing about it is everything can't always be a great idea. Everything can't always be a great deal. It can't always be a great value. Real estate is one of those situations where, it typically, like what we were just talking about, buying now is always better than waiting just because of what happens with the market. But like at a case by case level, that's not always the situation.
Yeah, definitely not.
And so, I had a very cynical view about like home ownership for a long time, even having been a homeowner, because it's like, man, I just got to jack with this stuff. Like if I had a landlord, I wouldn't like have to mess with this type of stuff as well. And so that's something that kind of goes into the calculation as well. But I do think, like we said, I mean, there's so much that can come from being a homeowner, and there's some stuff that sucks that comes from, that's you're down there fixing that leak. You're down there dealing with like the foundation issues and all that type of stuff.
Yeah.
But in general, I mean, it just seems, especially in the U.S., you're more likely to win than lose.
Yeah. And like in my homebuyer seminar deal, like my first slide is like, are you ready to buy a home? And so I go through like the financial aspect of it, and then also the personal, emotional side of it as well, because like financially you obviously have to be ready, but there's home ownership responsibilities. Like you probably don't have to mow the yard at your condo.
I do not.
So I mean, like there's different stuff. Like I pay somebody to mow my yard now because I do not like mowing my yard.
Yeah. Well, I mean, I haven't mowed a lawn. I mean, it's probably 2011 was the last time I mowed a lawn. I mean, like I'm not mowing lawns.
Well, yeah, actually, I'll tell you what. The real reason I can't mow my yard is because I got that freaking camper in my garage, I got a single car garage, so like the camper's in there, and then the mower and stuff's behind it. So now it's like a whole project if I even want to pull the mower out. So it's just easier. But I mean, yeah, dude, like
you don't have to sell me on it.
Yeah, like I think my hot water heater is going to be going out soon or something. Like, so like if you rent and like it's already pretty tight, like maybe you don't want the responsibilities of home ownership. Maybe your job's not super stable. Maybe you're going to be hopping around a little bit. So I mean, like there's like I almost want to sell people against buying a house and then be like, no, like this is really what I want to do, because like I really want this to make sense for people and like actually be ready and not just, oh, my friend bought a house and it's cool, so like I want to try to hop on that train as well. And like again, like if financially it makes sense and your lifestyle and you're ready to do it, then I'm all for it. But I don't want to be like that typical like salesman that's just like, oh yeah, it makes sense. Let's get something going. Like let's make it happen. So I try to just like not have a bias around it. I mean, obviously we have a little bit of a bias just because it's our job, but I try to just like meet the person where they're at, see if it actually is going to make sense for them or not, and then just whatever happens after that.
Yeah, I mean, you're not going to get every scenario. Every scenario is not going to make sense. There's enough opportunity out there that will make sense that we're going to be fine.
Yeah,
you know what I mean. Like
that's
it's
where
not,
I'm at with it too.
But I do think that if you talk realistically up front about, because everybody's fantasizing about building out that basement into like a man cave, right? Or my wife, like, oh, this kitchen's going to look great. Everybody kind of starts to, like, when they look at a house, they sort of take ownership and they start to fantasize about what their life is going to be looking like in that situation. It's none of the bad stuff. I mean, unless you got a very, very cynical person involved, they are not, maybe an actuary, they are not thinking about the negatives associated with it. And so I think you have a responsibility, and the same thing with lending, to make sure they're aware of these type of things, and so that when they go into it, they know what it's going to shake out to be, what the potential risks are.
Yeah.
But again, I mean, most of the time it tends to make sense, at least financially, in terms of like an investment, appreciation, and that type of stuff. Buying a home sooner rather than later tends to make more sense.
Yeah, and that's why, like, with us leveling up and stuff, I'm not really necessarily thinking about, like, oh, if I go buy this house, I'm not worried about what the market's going to do, because I know what the market's going to do over the long term. So I'm not really trying to time the market as far as, like, when's the perfect time to sell my house, when's the perfect time to buy this other house. It's like, lifestyle-wise, it's making sense for us to start kind of percolating that in our minds, and, like, whenever we're ready, we're going to know that feeling. And I don't really care what the market's doing, because I know it all shakes out in the end.
Yeah, there are people that do that. There are people that flip houses, but there are also people that like day trade crypto. And to me, it's just like I got enough anxiety in my life already to try to like jack with something like that.
Yeah, exactly. So cool. You got anything else you want to talk about?
I don't. I think that